Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Monday the 29th of April 2013. Well, it's been a bit of a mixed start to the week really. We've had FX do quite well, stocks are slightly higher and overall quite a calm start to the week. But don't be fooled, this could be the calm before the storm. Now we've got some major events coming up. Major fundamental events. When this happens, interestingly enough, at the beginning of the week, you tend to feel like you're all lost at sea before we actually get some concrete direction. That's certainly the case for euro. So the two things that I'm looking at the start of this week is the euro and the Aussie. Let's take a look at euro dollar here. Now this is an hourly chart. It's just over the last few days. And what it shows you is that we've been trading within a range. 132 is still the top, with 129.50 on the downside. That's acted as very good support, also a short-term buying zone. What does this mean? Well, right now, there isn't too much directionally wise to move us one way or the other. Yes, we've got some CPI data out tomorrow for April. We've also got March unemployment data, but we kind of expect a weaker impulse in the CPI data. Likewise, another record high in unemployment. None of this is new. But what could be new though is the ECB. There is now market expectation for a 0.25%, so a 25 basis point rate cut on Thursday, which would bring the overall interest rate in the Eurozone down to 0.5%. It would be the first rate cut, the third rate cut, under Mario Draghi's reign, and the first rate cut for many months. It would also be the first actual policy action for many months, really, since Draghi mentioned that they would do whatever it takes to save the Eurozone. What could be the potential? Well, if we do get a rate cut or some other unconventional measures, then we could see euro dollar break below that 129.50 boundary. Likewise, if we don't get that or we get a miss, then we could get back above 132, heading towards 134. But we think that if they were to cut interest rates, there could be more downside to come. 128, then potentially 127.50 could act as very, very good support levels. Now also we've got the RBA meeting tomorrow morning London time, so by the time we get to our desks that will be all done and dusted. There could also be a bit of a dovish impulse from the RBA. Let's take a look at the daily chart for Aussie dollar. As you can see, it's really hit a congestion zone around about 101.30. That's also 103.50, sorry. That's also coincided with the 50-day moving average. Now likewise, if we get quite a dovish impulse, even though we don't expect them to make any changes to interest rate cuts at the moment, there is about a 30% chance of a surprise cut. Right now, we don't think the data is weak enough and that the RBA will actually stay in a wait-and-see mode. However, if they kind of wait and see with a dovish impulse that they will use rate cuts as a weapon to protect the Australian economy going forward, then we could see maybe a breakdown to those 101 levels. But if we don't, and they sound fairly sanguine, a bit along the lines of what the RBNZ, so the New Zealand Central Bank, did last week, then we could get back to those 105 highs. So that's kind of where we are right now. We're trading sideways. The impulse or the momentum has kind of fallen out of Aussie dollar at the moment. We have seen a bit of a scaling back of Aussie dollar longs, but the market could continue to do that. So do watch out for that RBA meeting. We think it's going to be pretty critical in the near term for Aussie dollar. But overall, watch out for those two events. A lot of macroeconomic data to digest this week, but it will have huge implications, not just for FX markets, but also for stock markets and for commodities. Okay, everyone, thanks for joining.